If you look at this recovery, which we all know has been a very weak recovery, and you say, what's the main culprit? The culprit is productivity. So we haven't had the kind of growth that we normally have during recoveries, and the question is why. There are a couple of explanations for it. Of course, the president likes to say it's because we've recovered from the worst recession that we've seen since the Great Depression. That story actually doesn't wash. We know that very deep recessions tend to be followed by rapid recoveries.
Big bounces.
Not
the harder you fall on a trampoline, the higher you should bounce if everything's correct.
Right, and the historic evidence does suggest that. So the question is what's going on. Certainly policy must play a part in that.
When I read your question answer that you sent me before the interview, everything to combat low productivity ended in the word policy.
Well, that's right, exactly. And I think if you think about it, the main thing, of course, is taxes. So number one on anybody's list for increasing productivity growth is to get capital expenditure up, to get the productivity of the workforce up. And the way to do that, to my mind, is to make sure that we don't have excessive taxation of capital.
So if you were running for president,
Well, we actually have four this week, if you include the two emerging market meetings in Brazil and Turkey. And then, of course, we have the ECB and the Bank of Canada. Our expectation is that all four of them will be unchanged. But the key swing factor is what is the statement going to be? What are the Q&A going to look like in terms of the ECB meeting? Will Draghi protest the euro strength, relative strength? Or will it be a relatively neutral statement? So that's, I think, the key focus for this week. Well, I mean, our base case for this week is on hold. But there's certainly a suggestion that before year-end or heading into next year that either the program will be increased or it'll be more likely extended. And that's inflation expectations have turned down again. Growth is relatively okay, not spectacular, not poor, but relatively okay. But inflation has turned down again.
And that position is going to be...
It's about organic growth being important, and it's about the third quarter so far being really tough on the capital market trading operations. The good news about that, I think, for the banks is that they've distributed at least the risk off of their balance sheets and onto trading platforms, so that's a positive. I think beyond that, you've seen Fed expectations being pushed out. That's a positive. Investors actually have been selling as prices have been rising. That's good. We've been climbing a wall of worry. So there are a couple of jokers in the deck here, but it looks like the market could try to make a run to return to the highs that we've seen before. It comes back to the issue of, are you achieving top-line growth? And selectivity, I think, in this market's important. And where you're seeing top-line organic growth, and you're seeing good capital deployment, and you're seeing good yield on acquisition, you're getting companies with okay results. Where you're not seeing that, where you're not seeing transitions, you're getting bad results. And the market, I think more so than typical, is rewarding on the upside and also penalizing when the mist occurs.
You know, what's surprising?